9:03. You think we should get going, you guys?
Yeah, I guess if people have busy days, and even though it's a Friday, we can start.
Okay. Okay, so I'm Doug Martinson, and I'm just going to be working in the background on this video conference we've got going on. And here's how it's going to work. We've got the whole theme is around trying to help small business figure out this whole COVID-19 support that's going on. And so we've invited 3 people who are experts in that territory, or at least know a lot more than you know, the normal person to do that. So we've got each one of them just giving kind of an introduction for about 10 minutes each. And during that time, you're welcome to send questions into the chat. There's a chat icon at the bottom of your screen if you're using a computer. And I'll be watching the questions coming up in the chat. After the 3 people have spoken, I'm going to put it back into, you know, we're all on the screen. Anybody, actually, even right now, anybody who wants to turn on their video is welcome to. And then when we're in the sort of all on the screen piece, just by putting up your hand, you can ask a question, or you can keep sending them into the chat. And we're going to keep this to 1 hour, just respecting everybody's time. If you've submitted a question into the chat that never got answered, Chris is going to be following up with them to make sure that everybody gets an answer to their question. Right, Chris?
Morning.
Yes.
Okay. And so what I'll do is I'll get Chris to introduce the 3 speakers, and then we'll have each speaker one after the other before we go back into the all on the screen together. Chris?
Well, thank you, and good morning to everybody. And right off the bat, you know, a thank you to Paul, Richard, and Ken for participating in this. And as Doug alluded to, this came together real late, as through some of the other video chats, you know, I've been on, and I'm sure many of you have been on, and even talking to your clients and businesses, that while all these programs have been put out there by the different levels of government, people have had different challenges of, I always say, you know, trying to fill in a Service Canada or a Canada.ca form. That's where things, you know, end up all over the place. So your insights are certainly going to help people either get things done or provide them the direction of where to go. And that's what we're very appreciative of. While this came together late, we still see that, you know, one day doesn't fit everybody, that we'd certainly like to, as things continue now in this reopening mode, and there's still going to be more questions about that too, in terms of how programs continue, or will they, or what adjustments, that we would like to do this again, and you know, obviously as possible, continue to expand it, because more and more businesses will have questions. And then just in terms of Doug's comment, we'll take your questions, and if it's a specific question, I will forward that back to each of our presenters today. And what that could end up being, that creates a one-on-one conversation with you and the presenter, because obviously everybody's question is going to be unique to their own situation, and we certainly respect that. So welcome, and please do not hold back on your questions. I mean, you know, what do they say? You know, no question is a bad question. So, you know, it just helps everybody gain some understanding. So to start, just want to introduce, many of you do or don't know, but Paul Legge. Wave, Paul, you got to wave. There he is. Paul's the senior commercial advisor with the Sunshine Coast Credit Union, and he's been working literally overtime in helping businesses understand these COVID-19 government support programs. Second is Richard Wilson. And wait, Richard, many people know Richard, you know, through the previous business, Coast Group Accountants, and now it's Crowe MacKay, which Richard just brought along his previous employer and morphed it into, here's the new partnership. So, and Richard's been involved in a lot of activity on the coast, going all the way back to GST programs, et cetera, of helping to explain to businesses. So we appreciate that. And then here's Ken O'Donnell on Wave Ken. There he is. Here's something that's been probably talked about almost the most is from businesses is about leases and rents and mortgages and things like that. And Ken, as a property manager, he's that go-between through the business owner and maybe the renter or the lessee. So we're hoping that for some of those questions that Ken's going to be able to provide some insights there. So from that, again, please use the system and bring on your questions, and from there we'll go and get Paul just to talk about some of his thoughts about the CEBA, the Emergency Benefit Account, just briefly, Paul, and then we'll get Richard and Ken to somewhat the same for the Qs. And Ken, I don't know how this acronym of CECRA or whatever, CECRA, but the rent assistance thing. So we'll go from there. So Paul.
Yeah, thanks, Chris. So some quick notes of CEBA. We've been living it at the credit union for a little while here. It was announced back in late March, and I think some of the financial institutions started rolling it out on April 9th. And I was looking up a few stats of it. From April 9th to April 24th, there had been 380,000 applications for it, which is $15.2 billion. So it's a very well enrolled and sought after program. I'll talk a bit about the loan structure for any businesses that may not know it. The reason why it's so well enrolled is because it's a pretty appetizing loan to take on. It's $40,000 interest free till the end of December 2022. So if you get it in the next couple of days, or if you've already have it, it's almost 2.5 years of an interest free loan. At the end of that, it goes into, it remains in a loan, but it starts accruing interest at the end of December 31st, 2022 for 3 years. And after those 3 years, you have to pay it out. That's almost a 5.5 year loan right there. The real nice thing for businesses is if you pay it back before that December 31st, 2022, you get 25% of that forgiven. So if you take out 40,000, you pay back 30,000 of it, you don't have to pay the rest of the $10,000 back. So
Paul, can anybody apply for that?
Sorry,
I didn't mean to interrupt you. Can anybody apply for that, or is it just?
I will get to that in 2 seconds. Actually, I'll let you know. So that's a perfect segue. Eligibility. To be eligible for it, you have to be a Canadian operating business or nonprofit before March 1st of this year. Most qualify for that. You also have to have an active business account with your financial institution before March 1st of this year also. Your financial institutions won't do it if you've opened up the business account after March 1st. It's a way for there not to be a flood of people back and forth between various institutions. The real, not eliminating criteria, but narrowing of criteria is the salary that you have to have had in 2019. You have to have had at least 20,000 of T4 salary in 2019. Now, if you're a sole proprietor and you don't have any employees, you won't qualify because you claim your business income. If you are a business that only has contractors, probably you won't qualify because you're issuing something different. I think it's a T4A, and if you're in the construction industry, it's a T5018 or something like that. And so there are some businesses that actually don't qualify. The best way to find out, and the easiest way and the simplest way to find out, is get your T4 sum. It's your summary of remuneration. On line 14 of that document, it will show you your T4 salary for 2019. You can ask the CRA for it. getting a hold of them. You probably will have to pay back the loan before you actually get a hold of them. Your awesome accountants are generally the best people to go to. They're busy, but they've been really good on supplying the businesses on the coast here with their T4 sum. And it will show you what your salary is. So again, that's 20,000 of T4 summer minimum up to $1.5 million. That's the range that it has been put in place for that. So like I said, to make your life easier, just ask her that T4 sum. You know what, if you don't know, I've been getting my members to just get that T4 sum, send it to me, and I take a look at it. Your banking institution would be able to tell you very quickly if you're having troubles figuring that out. Yeah, and so that's. I don't want to get into too much detail. The last thing I will say though, when you do apply, you will go through like it's called an attestation. So you have to say, yes, you can bind the company. You're allowed to take a loan on behalf of the company. Yes, you've had a certain amount of salary. The one other thing is you have to attest that you're going to use the funds for non-deferrable operating expenses. That just means expenses in the here and now, pretty much. It's payroll, rent, utilities, insurance, property tax, and any scheduled debt you already have. So you're testing that you won't issue a dividend for $40,000 to yourself. You won't increase your management compensation. Go out and buy a car. That sort of stuff. It's difficult to know how the government's going to be checking that, but part of that same attestation is you are acknowledging and agree that the CRA can do an audit after the fact, just to check on the veracity, the truthfulness of your comments and the information you provided. So just keep that in mind. The program is meant to keep you operating for however long the next handful of months until whatever the recovery looks like starts to happen. So yeah, that's pretty much the CEBA, the Canada Emergency Business Account in a nutshell. There's a few nuances to it, but that's your basic, the basic structure of it. And I hope I answered that question. If everyone qualifies, not everyone qualifies. It's that eligibility I sort of talked about, which narrows people down. So yeah.
You did answer my question. Thank you.
Awesome. Good. Thank you. So yeah, Chris, to you. You're on mute, Chris.
Oh man.
All right, Doug, I guess you want to introduce Richard.
Okay, so from Paul, we'll go to Richard. Richard, you up?
I am ready. Everyone can hear me okay? Yep. So,
Change the picture.
what's that?
You still got, there you go.
Oh, there you go. Okay. So we want to talk primarily about the CEWS or the CEWS, the CEWS, which is the 75% wage subsidy, but you can't talk about that without also considering the 10% TWS, which is the temporary wage subsidy. So one of the things to keep in mind, and this is sort of something that's catching people off guard as they're going through the process, is the temporary wage subsidy, which is a separate program that was part of Bill C-13. Whether you've done that or not, in effect, what you will find is when you're actually applying for the 75% wage subsidy, you are required to deduct the 10% wage subsidy from what you're claiming on the 75% wage subsidy, whether you've claimed it yet or not. So a lot of people thought, oh, great, well, I didn't really bother with the 10% because it wasn't much, and so I didn't care. And now I'm going to do the 75%. But in effect, you're forced to have to calculate the 10% wage subsidy in order to complete the application for the 75% wage subsidy. So unfortunately, it's both, and you have to do it whether you want to or not. So just a quick comment on the 10% wage subsidy. the ability to claim that 10% wage subsidy is a lot broader than the 75% wage subsidy, which basically means there will be some people that can claim the 10% that can't claim the 75%, but almost everyone that can claim the 75% will be able to claim the 10%, but they're different programs with different rules and different periods, and it's totally not anything similar at all. So you have to do one and then have that number to do the other one. And so if you have not done anything about the 10% wage subsidy and you're contemplating the 75% wage subsidy, unfortunately, you're going to have to go back and figure out the 10% wage subsidy. So, you know, there you go. Governments don't like to make anything simple. So now the 10% wage subsidy, it would just very briefly is one that is available essentially to most small businesses, including individuals and proprietors that have payroll. It can include non-arm's length, so owner managers of those businesses. It's 10% of the gross wages up to a maximum of $1,375 per employee or $25,000 per entity. And that's cumulative, which means you have to track it by employee to know when you hit the maximum amount so you can stop calculating the 10% so that you can claim your 75%. So that's the 10% wage subsidy. So putting that aside and sort of shifting gears over to the CEWS, there's a couple of big picture things that I think are really important for people to understand. One is there is a number of qualifying steps to actually get to the point where you get some money. And so what you should not do is assume that you qualify. In most cases you will, and it'll be quick, easy answers to say yup, 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 and yup. But do not assume that. Do not take that for granted. You have to walk through the steps. And the reason that is important, amongst others, is that two things really. One, like the CEBA, there is a legal attestation that the responsible person has to fill out. You're basically signing your life away, because if you do it wrong, there's big penalties. If you do it wrong on purpose, there's really big penalties, and they can throw you in jail for 5 years. So don't do it wrong. Don't mess around. Do not cheat. That's the biggest thing. And so you want to really walk through those steps and make sure that you qualify on the various levels. And the qualifications, there is a number of things to think about. First and foremost, you have to be a qualifying entity. Now, for most of us that are going to listen to this, that'll be no problem. You should be a qualifying entity, although public institutions are not in there. So there's some quasi-governmental organizations that are left out of the wage subsidy program. But even not-for-profits and charities, a lot of them can qualify for this wage subsidy, although their revenue calculations get tricky. The next thing to qualify is that you have to have had a payroll account set up before March 15th, 2020. So if you're sort of an owner manager and it was just you and your spouse and you were claiming dividends and you never had a payroll account set up, you just did not have that actual account set up with the CRA before March 15th, 2020, you're out of luck. Just hard and fast, can't do it. Now, if you had a payroll account and you didn't use it before, that's okay. And we'll talk about when that's, it's just you had to have a payroll account. The next thing is the qualifying revenue. And so it's this decline test. And this is probably potentially, in some cases it's super obvious and it's really easy. You still need to document it properly. In some cases, this will be very complex, because one of the interesting things about this particular piece of legislation, Bill C-14, is that it has its own definition of qualifying revenue. And it sort of dovetails with other definitions of revenue in accounting and tax, but it's not exactly the same. So it sort of begs the question of, well, what does that mean? And there's a lot of gray area in there. I think for most businesses, especially those that were significantly impacted by COVID, this won't be an issue. It'll be pretty obvious what your revenues are, and it'll be pretty obvious what the decline is, but do not take that for granted. You need to have the documentation to support that. It's actually on the revenue test that they have the nastiest penalties. So one thing to note is that the legislation actually says if you do something or don't do something that you normally would in order to qualify for the revenue decline test, you're immediately offside, they'll penalize you, and they could throw you in jail. So you have to operate normally and let the chips fall where they may. Now, again, if you're legitimately impacted by COVID, no problem. The chips have laid themselves out clearly. But it is hard and fast rules. And so if you're finding that you're having to test for, say, period 2, and you find that your revenue decline is 29%, you get nothing. It's 29.5, still nothing. It has to be 30%. And so it's just a hard and fast line. And that's just the way the legislation was written. So here's another thing that a lot of people get tripped up on is that the revenue decline tests are based on the calendar months, March, April, May for period 1, 2, and 3, but those are not the periods that you're actually claiming the wage subsidy for. So you're doing the revenue decline test based on those calendar months. When you actually get to doing the wage subsidy calculation, you're doing that on it's actually the same periods as the CERB. It's like March 15th to April 11th, and then the next one goes to May 9th, I think, and then into June. So different periods, right? But for that revenue decline test, you're basically looking to say, hey, was my March, for example, with March, was my March 2020 revenues 15% less than my March 2019 revenues, or 15% less than my average of January and February? And if it is, then you qualify for period 1. And one of the good things in the legislation actually is that if you qualify for a period, so normally people are starting with 1, so if you qualify for period 1, you automatically qualify for period 2 with respect to the revenue decline test. So you do not have to retest for effectively April, but for period 3, which is the test month is May, you would have to retest in May. You can also choose between effectively, call it accrual accounting or a cash basis of determining your gross revenues. So you can actually elect to use a cash basis to calculate, well, how much money did I bring in March versus March 2019 or versus January, February of 2020. So you can elect for that as well. Once you've made that determination again for any particular period, then you do automatically qualify. And so you figured out that you're a qualifying entity and that you had a payroll account and you had the appropriate revenue decline test. Then you have to determine whether you have what you can claim, and that depends on eligible remuneration to eligible employees. And so this is where it starts to get complicated again, in the sense that eligible remuneration, there's some stuff that's excluded, but think of it as just your regular wages that you're paying to people. You know, weird stuff like stock options and some taxable benefits, those don't count. If you're doing the math, just default to the lower number. Don't include extra stuff. If you're asking yourself, well, can I include this? Assume the answer is no, and just go with the base wages and take the more conservative position. So that's around qualifying remuneration. Qualifying employees there is one particular rule in here that people need to be cognizant of. If you had an employee in a period, a claim period, and again, if we talk about period 1, that's actually March 15th to April 11th. If you had an employee that did work for you for part of that time, but in that period, they had 14 consecutive days where they did not work for you, then they are not a qualifying employee. And that's kind of their pretty rough way of avoiding double dipping between the CERB that individuals can claim and the wage subsidy that corporations can claim. So you also want to look at that when you're looking at decisions of, am I going to rehire employees, right? And so like the beginning of period 3 is next Monday. I have a number of clients that we've talked about, well, don't rehire them this week because you won't get nothing for that. Rehire them next Monday. Then they'll be working all the way through period 3 and you'll be able to claim the wage subsidy for them. So that's an important point around the qualifying employee. Now, coming back to the qualifying remuneration, the other tricky bit with this is, and this is where a lot of people have tripped up as well, is that you might have your pay periods, right? You pay bi-weekly, you pay them monthly, you give a mid-month advance and pay them at the end of the month. It doesn't matter when you paid somebody. What matters is what did you pay them with respect to each of the 4 weeks in a claim period. So, you know, take a sort of an extreme example. I only pay my people at the end of the day after the end of the month. So they work for me for 30 days. On day 31, I pay them. Well, now I've paid them on day 31. with respect to each of those 4 weeks. And so when your pay periods, like if you're semi-monthly, it's super tricky. Well, I mean, you just got to chop it down into days. But if you're semi-monthly, it doesn't line up with these periods. And so what you'll find is you have to do some tricky math to figure out exactly what you paid them with respect to those weeks, not when you paid them, not when you're doing your payroll, and continue to do your payroll normally. Don't change that. It's just when you come to the calculation of the wage subsidy, potentially you have to do it on a different basis. And if that sounds like a pain in the butt, yes, it is. And if that sounds complicated, yes, it can be, especially if there's other remuneration or overtime or vacation pay or these kinds of things. I was working on one last night, and I still need some more information because I got stuck on overtime related to which period. So I'll finish that today. I got the rest of the information. So it can get tricky, but that's the important thing, is it's paid with respect to those periods. All right. One of the things that's also good for businesses to note is that in the context of paying an employee or rehiring an employee, that employee may have claimed the CERB and may fall offside for the CERB. That's not the business's responsibility. It's not your problem. The employee themselves has to make their own determination of whether they qualify for the CERB or not, and whether they have to repay the CERB or not. Now, you likely are going to have those conversations with employees, but it's not the business's fault. And if they have to repay the CERB, that's not your issue.
Plus, we're only doing the CERB right now, so yeah.
So then when you actually get to claiming, so all of this, we haven't even started to claim the wage subsidy yet. So now we finally figured out that I'm a qualifying entity. I have the revenue decline test. I had a payroll. I have eligible remuneration. I have eligible employees that might even include non-arm's length people like owner or manager. Now I can do the math. And when you get there, what you'll find is that there's essentially 4 categories of people that you might be claiming something for. The first category, and kind of the easiest, is pre-existing arm's length employee that's been working for you for the entire time. You can claim up to the 75% wage subsidy for them, up to the $847 a week. And if you hire them effectively at 75% of the average remuneration that they were making between January and March 15th, and because they're only working for you part-time, and you're effectively hiring them or paying them currently at 75% of their old rate, you can effectively get a 100% wage subsidy for that person up to the $847 a week cap. So that's sort of, it's generally 75% of what they have, but the way the math works, it's the greater of to lesser of calculations, and so, which is a little weird, but it can work for pre-existing employees that you can effectively get 100% wage subsidy if you are paying them less than you used to. The second category of employees is a new hire. So this is somebody that didn't work for you before, but now you've hired post March 15th. And they're relatively simple because you just get 75% up to the maximum. That's it. There's no baseline income for them. There's no average of what they made in January to February, March. And so it's relatively simple, but you can't get 100% on that new hire. Then we get into the category of non-arm's length. So this is owner, manager, and your kids and your cousin and all of those kinds of things. If there is non-arm's length employees, the maximum you can claim is based on what you were paying yourself before. So if you were only paying yourself, say, a couple grand a month before, and you're like, well, I'm going to make it $4 a month so that I can claim more wage subsidy. No, there's a rule against that. It basically will get reduced to 75% of what you were paying yourself pre-crisis. So there's a rule there to obviously sort of stop non-arm's length people from artificially increasing their salaries during the wage period subsidy to get more. And then the fourth category is a new hire that's also non-arm's length. And so they, of course, thought, well, we don't want everyone hiring their kids for the next 3 months to claim the wage subsidy. So if there's a new hire of a non-arm's length person, you just get nothing for them, zero. So those are your 4 categories of potential employees. Now, What you'll find when you actually apply, the easiest thing to do is go through your My Business account if you have that set up. Your accountant, if they have Rep a Client access, can do it for you. But at the end of the day, you're still going to need to be the person that signs off on the attestation and says, yep, everything's ready and good to go.
Needs to.
And the application itself, when you get there, is not very complicated because you have to do all the math yourself. And then they basically just ask you if anyone's actually gone through that process. It's relatively simple. It says, how many employees? What was your eligible remuneration? Did you retroactively hire anybody? What are you claiming? Deduct your 10% wage subsidy, hit the button and say, send me some money. So the application itself online is easy. Getting the numbers correct to put into the application, not so much. Okay.
Okay.
That's kind of my spiel on that, which covered a lot of stuff. Obviously, and again, this is where I would say, what do they say? The devil's in the details, right? And so when you get into these things, if it's qualifying revenue or each of these items can be like really straightforward and simple, or it can get super complicated. If you're talking about corporate groups where there's parent subsidiary relationships or affiliated groups or joint ventures, there's various elections that you can potentially look at. Revenues, you have to consider non-arm's length revenues that your corporation might have. And so as soon as you have anything that is a bit complicated, it can quickly veer off into the very complicated range of things. So I'll stop there, Doug and Chris, and let you direct questions, etc.
Chris.
Well, no, as everybody can see, it certainly gets more and more complicated. And I know from businesses I've talked to that the wage subsidy has probably been one of the most, I guess, whether it's been misunderstood or confounding, or as Richard alluded to, there's more rules and regulations and processes to follow. And always I would encourage people, because every business is going to have their own unique situation, I would literally recommend you fill up Richard's inbox basket and seek some guidance, or seek guidance from your own business accountant, and how to sort things out. So we want to get on to Ken here, and I see there's already some questions in the chat that Doug will allude to, and I'd really like to get to some of those, because that's what's important is, our business participants here, they have specific questions, and see if we can at least get them tabled and move on from there. So I'm good. If Ken's got some comments, then we can go from there.
Good morning, everyone. Well, I was brought into this late in the game, but I have a few experiences or advice to give anybody that's actually dealing with the commercial units or residential.
This is Martin.
Sorry? Oh, I thought someone said something. So my residential units, I want to start with those. In fact, that I see a couple glitches here coming along with the payouts, and that is, people are saying they have roommates now. Now the ruling is that you have to make 30% of your wage. So it's important to make sure that you read it, and everything seems to be continuously evolving here. And so you could read an article one day, and the next day it can be interpreted another way. So what I've learned mostly about this is the fact that keep everything in writing and be able to come back to it. Because entering apartments, going to businesses, doing maintenance on their units, the contractors now, the contractors have their own set of rules here. And what they're doing is they're only allowing certain amount of contractors in to work in a unit or into a building, or so they can be on schedule or off schedule. And so these are things that have to be watched. I noticed that the units themselves, the clients or the commercial clients, will say, well, I'm not making any money. But that started out like that. Like, I think at April 1st was the worst time of it because nobody was used to it. Nobody knew what was going to happen to their business or to their employees or to anything. And so they withdrew and went, oh my God, this is going to destroy the world. But it turns out that they are starting to come back now. And I saw a big improvement this month on the incomes from the commercial units. There's a couple of ways to deal with the incomes. You can direct them to an accountant, because that's the best way. I have a few people that are going to their accountants, and so I'm getting, okay, don't worry about it. We'll deal with the accountant and file it that way. Other people said, no, I can't pay the rent. But then there's a form that allows you to send the payments out. Can't think of the name, but that allows them to pay later. And that's a good form to have them sign and just let them know that, okay, if you can't pay, I mean, if the government says that rents are to be paid this month, then, but if you can't, then we can still postpone it, but everybody will be happy in the end. So, but as far as going into a unit, make sure that it's all documented. That's so important right now. And to make sure that you have the time, and signatures and what's going on, because everything is going to be monitored in the end. I think revenue is going to come back hard and heavy on anybody that tries to fudge the system here. So, I mean, I think that everything else is the programs. You have to keep on top of them. You have to know what they are, but watch out for changes, because the government still, this is new to them and they're trying to get a grip on all this. And so we have to do the same thing. So, and that's about all I have to say today, gentlemen, ladies.
Okay, good. Now, if I've seen there are some questions and some very specific ones, and as I figured out, most of them are going to be at this point towards Richard. So hopefully that's what's facing a lot of small businesses from the standpoint of bringing back employees or going forward. And I just want to make the comment that on this morning's releases, they announced that wage subsidy will go beyond June. My understanding is, and our experts can correct me, all these programs are in place now until June. And as we start unraveling or opening up, then there's going to be different needs. And one of the needs this morning is, great, your business opens up, you bring back an employee, but the business still doesn't have any revenues. You need the employees to generate business, to generate revenue. So the government announced that will carry on. So I know there'll be more questions back to Richard about, how to bring employees back. And I can see from Paul's standpoint also, there's going to be businesses that need, whether it's the business loan or whatever, they have, I guess it's working capital. So, they have money to build their business back up. It's not going to start back up at wherever it was before. So please submit those questions, and I'll let Doug go read off. We have a couple of questions here, and we'll see what happens.
Okay, here's one from Lisa, and it might be more targeted to Richard. It's my pay period straddles the weeks, and my guys work varied hours. Should I do a dummy paycheck for each person for each week of the eligibility period for calculation purposes?
And basically the answer to that one is yes. You have to, in some cases, you're going to have to go back to your actual sort of time sheets. And it might be like picking up some of the days from this time sheet and adding them to the other days of this time sheet, so that you can figure out, again, what did you pay them with respect to each of the weeks in the pay period. So again, when your pay periods don't line up with the wage subsidy periods, you basically have to recalculate your payroll. Now, it should still reconcile to the same total over a period when it actually lines up, but it's because it's different periods. Yes, in effect, you have to sort of recalculate. That's like I said, that's what I was doing last night for a client was figuring out that recalculation because they pay semi-monthly versus the bi-weekly that happens to line up with those periods.
All right, thanks, Richard. And here's the one from targeted to Ken. Ken, are you able to talk about the CECRA? Ken, you're on mute there.
I was working on unmuting. No, I can't talk at that right now. I'm looking into that, and I can get back to Janice if she'd like.
I can make a couple of comments on that if just from a high level. So what's important to understand about that program is that it's a program that's designed to support the landlords who are willing to then support their tenants. And so it isn't something that the tenants apply for, it's something that the landlords apply for. And essentially, in a nutshell, and I don't know all the details, but it's favorable loans, interest-free loans, potentially some grants, but the landlord has to basically be playing ball and giving a break to their tenants. The tenants also have to qualify, and in order to qualify as a tenant that the landlord can be part of this program for and give you a break on your rent, you have to have had seen a 70% drop in your revenues. So again, I was helping a client with that yesterday, busy day yesterday, because they were looking at that. They're the tenant, their landlord has agreed that, sure, yes, we'll do this if you qualify, and was looking for confirmation that they qualified as a tenant, that would qualify for the program so that the landlord could apply to get the loan, so they gave them a break on the rent. So it's a little bit convoluted because it's the tenants that really need the break, but you really have to be doing it in conjunction with the landlords, or they're actually going to be the ones that apply for that program. So that's sort of the extent that I know of that. It's not exactly in my area of expertise, but by default, we've sort of been reading up on it.
Thanks.
Yeah, and maybe add to that a bit, that was actually good information I hadn't heard before. I think they haven't announced how they're going to roll the program out yet. They've just announced the program a week ago-ish. But I think what you're going to have to, the landlord has to do if the tenant qualifies, and correct me if anyone knows differently, is that you have the landlord has to give a 75% break on rent. The tenant covers 25. And then once you prove that once the landlord's proven they've agreed to this with the tenant, they will, it looks like, go to CMHC, the Canadian Mortgage Housing Corporation, and CMHC will give them 50% of that 75% back. So ultimately, the tenant's paying 25%, the landlord is taking 25%, I guess, of covering the cost, and CMHC is covering 50% of the rent. It ends up being that way. That's sort of the breakdown that they've shown. That's my understanding of it, at least.
Okay, thanks, guys. Yeah, I'm really starting to see Colin's comment about this is a great stimulus program for accountants. Anyway.
Yeah, isn't that always the way, right? The accountants and lawyers.
So anyway, another question for Richard is, if the federal government is suggesting CEWS will be the main business stimulus program going forward, based on trends you're seeing with your clients, what is the single most effective change we could advocate for in order to expand the pool of qualifying businesses?
Well, I guess I would say a couple of things. For sort of the scenario where a business is carrying on and is struggling, has these revenue declines, but has employees, still has them on the payroll, this is a great program. It's really supporting those businesses. It's going to make big difference. It can be big dollars, right? It is $34,000 is the one that I was working on for one period for a not that big of a client. And so these are big numbers. And so there's good support for businesses that are in there. I would say it's some of the areas where people are left out. So one of the gaps is your proprietor, right? You have a proprietor who the way they just recognize that business income. They're not an employee of their own business. I think that's a gap in the program, because there's in fact employers that if they had been incorporated and had been on a regular payroll, they would be the perfect people to be supported by this program. But by virtue of the fact that they're proprietors, they're left out. So I think that's probably the biggest gap in the program that that we would like to see changed if we got to make the rules.
All right, thanks, Richard. I
Doug?
think that I've exhausted the questions in the chat.
Yeah, Doug, I just want to say one more thing about the SEBA program, if you don't mind.
Go.
Yeah, just to those who end up watching this video and those online or watching right now, just remember the loan is still debt. It's not just, it will eventually have to be paid. So what I do recommend for those that are getting the $40,000 and pretty much any debt to help them out through this time is really understand your expenses going forward, where you're going to use every penny of this debt that you are taking on. You know, if possible, work out a cash flow statement and kind of work out worst case scenario and work up from there, just because you will have to eventually pay it back. And any debt that you do, take on, you know, just because it's interest free, and it is a very, very friendly debt, but really know where you're going and take this time to allow this $40,000 to keep operating, but try to sort of read the tea leaves as best as you can in this very uncertain time, to either, you know, really maybe restructure your business, look at efficiencies, try to predict where your industry or market is going. But really, I don't recommend just sitting on that on that 40,000 if you do get it, and just letting it kind of carry on and get you through this time without really looking at the business itself. Because, you know, if you look at your efficiencies, you look at your cash flow, you plan ahead, and I don't need to. I'm sure all the small business owners know this, but that means the quicker you can repay back that loan and get that 25% forgiven too. So that's just my extra snippet of being a risk-adverse banker, credit union person.
Doug, there's a couple of questions in there that maybe I'll just quickly touch on. Yvonne made a good point. Another gap in the overall program is businesses that have contractors. And so they can find themselves on the outside of the loan program. They can also find themselves on the outside of the wage subsidy program because they're not employees and so they don't qualify. That is another gap, and there are definitely businesses that are structured that way legitimately, and they are not able to access many of these benefits at all. So that is a good point. The other one, there was an earlier question in there from you, Doug, around applying for the wage subsidy. You don't need to rush. You can apply for the wage subsidy right up to September 30th, 2020. And so there's no deadlines to get your claim period one in right away. Don't rush and do it wrong and get your claim period in, you know, just to get it in. Take your time, do it right. I mean, you probably want the cash, but so you want to do it quickly, but you do have time to do that, and you can do it all later. You could do nothing and claim all of period 1, 2, and 3 wage subsidies on September 29th, and you'd be still within the time frame. So I think the point there is don't leave it till September 29th, but you don't have to rush and do it wrong.
Say, just following up on Yvonne's question there, you know, so let's say that you've identified the gap, Richard, and what steps should be taken or what can be taken to try and close that and make that a possibility for those kind of businesses that just have contractors?
Well, they are federal programs, and so if you're going to talk to somebody, it would be the federal politicians as opposed to provincial. So I see a comment in there that in contact with Patrick Wheeler,
Yeah.
and so that's probably the right guy to go to. I'll keep my political commentary to a minimum.
As Yvonne states, you know, this has come up obviously from the get-go for her business, and you know, that's before Patrick. But as you know, he's the the local MP, he becomes, our messenger or Yvonne's messenger back there. If keeping a political commentary aside, Richard, at least the good news is he is being the messenger. So, that's a good start, where a lot of times, people ask a question and don't even think it gets heard or anything. So we'll see where that goes. And I think, as everybody sees daily, the government, it's very easy now to start picking out the holes in all the different programs out there. And they're like the little boy with the finger in the dikes, right? They're running all around and seeing where to plug those holes. And as you just alluded to, Richard, that they're extending these programs because they're recognizing they address the big need of getting money out into the marketplace so people could still be spending or cover costs. Now they still got to do that while businesses are trying to generate revenue back, because as all these open up programs have been announced, nobody's quite sure where they're going to land or how they're going to land. And we've seen here in BC that's going to be phased, so it's not like the tap gets turned on tomorrow. So we'll go from there.
One more question for Richard. It's from Lisa. If we hire guys back in good faith, and we end up having an okay month and go over our 30% threshold, does the subsidy get clawed back?
So if you're, so the thought there is like March has happened and April has happened. So you either qualify for March and April based on those revenue decline tests, or you don't. The one that isn't known yet, of course, is May. And so if you were to rehire everybody in May on the assumption that you were going to qualify for period 3, and then you didn't, you just don't, and you won't get any wage subsidy. So that's a risk that you're taking, right, in rehiring people, especially for period 3, is that if you don't qualify for a wage subsidy in period 3 based on the same test that you applied for period 1, like let's say you qualified for period 1, you had some employees in period 2, but not as much, and you're going to rehire everybody for period 3, and then you do too well, you don't get a wage subsidy. And so that's why, to a certain extent, some businesses are holding off doing the claim for period 1 until they have seen what May looks like, so that they can actually determine what is the best test for me to apply for periods 1, 2, and 3. Because what if something changes and May is totally different, and now I'm like, I wish I had chosen this method of determining my revenue decline versus another one that was an option. So that is a problem. So it's not that the subsidy would get clawed back, you just wouldn't be eligible to claim a subsidy for, say, period 3 if you unfortunately or fortunately did too well.
Okay, we're getting down to there, and I guess just obviously there's just so much content, and I would two things: encourage everybody, if you have a question or an afterthought question, you can send it to me, exec@gibsonschamber.com, and I'll forward it on and make sure it gets to the right person. As we said, a lot of these financial questions, maybe you go direct to your own banker, or direct to your own accountant who looks after your financial, and we move forward that way. And any other questions, if it's going to you, any federal MP or a provincial MLA, you can either send them here or send direct. And just a quick aside, I'm sure everybody's aware, every Monday we have a big conference like this with Patrick Wheeler, and he comes out every week. He's restating, here's the government, what they just announced probably days before. So what's helpful is that obviously he gets to hear about a lot of the holes from each business individually. So again, that's important to keep that in the loop. So please watch your email notices and that every Friday, 4 o'clock. We're working to put a similar one together with Nicholas Simons to invite, and this is inviting for people on the whole coast. It's not just for one little area, it's the whole coast, because we're all in this together. And as the province now starts to dictate how we open up through, Dr. Bonnie Henry and her comments, that there's questions we're hoping that Nicholas will be able to bring to the table specific answers, because now everybody's going to get down into executional questions and how we do things. So, and any comment, please send me a note, anything, you can call me, but we want to hear back from you. We want to do this again. If it sounds like we have to, no offense, Paul and Ken, but the next hour will be the Richard Wilson hour. So, we can go from there, but, everybody understands the complexities of this because it's brand new for all of us. And, the good news is our experts here have done some forward reading and they're involved in it day to day. So that part's good. So our objective here is we want to keep it to the hour. We try to promise that way. I don't want to say who has to go do their exercise video workout, but we'll move forward that way. So in that, maybe in closing comments, if Deb, who's the Gibsons and District Chamber of Commerce president, maybe she just has a few words. And no, we don't have any gifts or parting, trips or anything for you gentlemen, but really, thank you. And I know, as you saw from some of the questions, our businesses, they're thinking about things, and everybody wants to get back to work. So we'll go from there. Deb?
Yeah, I just want to thank everybody for speaking and asking your questions and coming together. I mean, it's definitely, a newer forum for some, and some of us we're getting old hat at the Zoom meetings, but it's just really positive to see us sticking together and helping each other out. And just want to remind you guys about the Patrick Weiler meetings on Mondays, because you can join those on Zoom as well if you want your voice heard. Yeah, and just thankful that everybody's here, and stay tuned for the next and read those chamber newsletters because they're chock full of great information, due largely to Chris, who I'm very grateful for. Chris, you go above and beyond for sure as our executive director, so super appreciate that. So yeah, everybody just have a good Friday, and the sun's shining, and our community will recover. It will.
Last comment, this is being recorded and you'll be publicized, but it comes through the chamber website or through our Facebook. You'll get the link, as does the Seashell Chamber does the same. They record the Patrick Wheeler meeting. So, a day or two after it gets out there so you can catch up on things. And what I would really ask all the people who have participated today, you also become messengers and, pass on information to people. And the more we share as a whole community, of course, the stronger we're going to get working through all this. So my thanks to you. It's Friday. I only got 12 more hours of work, but I'll be good.
Okay, people, see you later.
Thank you, everybody.
Thank
Bye,
you.
everyone.
Wash your hands. All right.